Thanks for joining us here today. We have a 30-minute presentation from Shaun Baskett, CBO Director of Indices Sales. Shaun has 20 years experience in indices through BATS, I think it was stocks as well previous to that, and more recently, since I've known Shaun for the last 6 years at least, in CBOE. So today, Shaun's going to make a presentation on European indices and derivatives. So, thank you.
Super. Thank you for the introduction, Ronan, and thank you all for coming along. I hope you all agree that it's very nice to see each other in person rather than on Zoom, or I could see if you were watching this online, perhaps you may not give it your full attention, but I'm sure you will in this room here today. So welcome. As Ronan said, I'm a serial offender in the index business. I've been working in this space for quite some time, and today I want to really talk you through and tell you what we've been up to in the last couple of years. We haven't seen as many of you as we'd liked, but really I'd like to give you an idea of what's gone on at Cboe, what our focus has been, and what we've achieved. And I will tie it all back in at the end with indices, but I'd like to sort of give you an idea of how we faced some rather big challenges over the last 2 years and some of the opportunities we've seen that have been that we feel we can participate in and take advantage of. Now, just to give you a quick rundown of Cboe, you may know Cboe, or you may not know Cboe, but Cboe is previously in Europe, it was called BATS, and previous to that, it was BATS Chi-X, and previous to that, it was Chi-X. So we've been around for quite some time as a European equity markets. We run we have the largest intraday equity market share in Europe. Yesterday, we were 30% of the trading in intraday equities across Europe. We are generally the second largest exchange in each market, and as such, we put all that volume together, and we roughly work out as the largest equity markets in Europe, and generally very much a second market in each of the countries we operate in. 1 in every 2 equity trades in Europe touches our data. We have a pan-European equities clearinghouse, EuroCCP, and that has paved the way for derivatives expansion. On a global scale, we are the largest options exchange in the US. We run 4 equities markets in the US. We run markets in Canada, in Australia, in Japan. Most of this expansion has been done over the past 2 years. If you can see the footprint here, we are taking our market structure, our technology that we built at Cboe in the US, we're bringing it to Europe and bringing that to Asia and Australia and Canada as well. We've recently acquired a crypto exchange, and we've got some more acquisitions that we're able to announce upcoming. So it's a busy time for us, but probably our biggest challenge in the last 2 years was with Brexit. Most people, I think, will probably agree that the UK's exit from Europe wasn't done in the most timely, efficient, or orderly manner, and as a result, we as an exchange didn't really know up until January 4th, 2020, what was going to happen, how it was going to happen, and what was going to be the outcome of that. Were we prepared properly, and had we done the right homework? As you can see here, this graph is the equity trading in Europe over the last 2 years. Really, we start from early 2020, and you can see the rise. It's quite substantial, and this is a picture that potentially you could say that people have been trading more from home, more people are getting involved in equities, and more people are looking for equity returns. You can see in March when we saw Russian troops in Ukraine, that has dropped considerably, so we are in a very odd time, but over the last 2 years, equity markets have done well and trading has done very well. Cboe in that time was faced with a lot of challenges. As I said earlier, Brexit was one that was very prevalent to us, and we were very unaware what was going to happen. I don't think anyone was aware what would happen on January 4th when trading opened. We were at the time roughly about 17% market share across the European markets, and frankly we were dropping. We needed to do something. We needed to work to change how we offered our products, and we did that. And as you can see by this graph, we've gone from 17 and then dropped a little further down. The efforts, the changes we made, and there were slight tweaks to our market maker rules and our market structure, but those tweaks have resulted in an increase in volume up to about 23% of daily trading. You can see from this graph, it's very similar to the stark change what happened in Europe in 2020. So the light blue line and the green line were our two existing markets at the time, with the dark blue line being our Amsterdam market. So our London markets pretty much plunged in terms of trading turnover. All that was left initially was the UK market and UK equities. Soon after that, we brought on Swiss equities. But fortunately for us, our market model worked, and our Amsterdam exchange thrived. And we found that that model, the clients we had stayed with us, and we gained more clients over that time. So that's been a big push towards what has happened in our equity volumes. And as you can see from this graph again, we've maintained and increased our London trading. We've brought back our Swiss trading and worked quite hard to get that back to levels that it was pre-Switzerland leaving the European trading area. And really, the idea that what we've done over this last time is to really improve market share. And what that means is that our market data is much more relevant, and the market data that we generate from this trading activity goes into our indices. So good market data provides for really good indices. And because we use our own market data, we don't buy market data from other exchanges, other competitors, and that flows through into our indices as well. Now, our second challenge over time has been to provide the market with an alternative in derivatives trading. We are globally a house that trades an awful lot of derivatives, equity options. We trade the S&P options in Chicago. We trade the VIX options. We trade options on MSCI, on FTSE Russell, and a lot of other products as well. We're well known for our trading in volatility. We were approached by banks who were looking for an alternative. They'd found that trading derivatives, and certainly specifically index and equity index options in Europe, had become stale. And what they pointed us to is this graph here. And as you can see, in 2009, volumes in the US and volumes in Europe were roughly the same. The size of the economy in the US and Europe is roughly the same. But over the last 12 years from when that data's come from, you can see the growth in trading in the US compared to trading in Europe. Trading in Europe has pretty much been flat to down, and trading in the US has grown every year and continues to grow. What we're trying to do is not replace the small gray piece at the bottom. Our opportunity is the large green line that represents the gap between what exists now in the US and what exists in Europe. People want to trade volatility in Europe, people want to trade options, people want to trade futures, and they want to do it a different way than is currently available to them. Not everyone, but we feel we were approached by certainly a large number of market players who were looking for an alternative. Our idea and our approach is to develop on-screen market in size that is liquid and has deep liquidity, fully transparent, and we're going to offer a one-stop shop for pan-European clearing. And why have we decided to take on large European exchanges with existing market structure, existing market makers, existing clients? We asked the people who approached us the same question to say, how is this going to work? How are we going to make this work? How are we going to get volume? And this is how we looked at it, and this is the elements that we're looking to address, and we're trying to bring in people who currently don't trade European equity futures and options because they don't like the market structure. We're looking to provide US quant trading firms who are familiar with the options market structure and liquidity that's available on our CBOE US exchanges. We want to bring that to Europe. We want to bring that market structure. We want to bring that screen trading, straight through processing and execution, so that when a trade occurs on screen, it goes straight into a trader's risk book, it goes straight into their risk model, which updates immediately, and the next trade is on. Currently, an awful lot of the big trades in Europe are done OTC, if you will, or off exchange and then printed on exchange. And what happens with this is you have a delay. You have people negotiating trades that are then registered. You may see the hedge, but you don't see the original trade. Market makers, market participants want to see this original market flow, and that's what we're looking to provide. So a broad range of futures and options on regional and country indices, which we had. Our indices have been live and ticking in most cases for 5 to 7 years. And we have a ready product which is of high enough quality to have derivatives listed on them. So we're using and attracting US algos, US trading firms who like to have quick access to liquid markets, and that's what we focused on. So we're looking at structured products providers, Delta One, and also, and I'll go into a little bit further, into balance sheet optimization and making sure you can trade and clear and use your balance sheet as effectively as possible. In order to facilitate an options exchange which addresses the issues of our clients and those who approached us, we needed to offer a clearing solution. And by buying EuroCCP, this made the derivatives clearing possible. Currently, if you want to trade across Europe in futures and options, as you can see from this slide, there are 6 different venues, all offering different clearing houses, and it's very hard to optimize your clearing collateral and optimize your balance sheet with margin offsets, etc. We offer one-stop clearing through EuroCCP. All of our indices, all of our derivatives products clear in the same place. Margin offsets are available, so it optimizes balance sheet. For example, our Swiss index is SEC approved, so we have gone through the work to make sure that that index is something that is able for American traders to trade. So we've made certain tweaks in our products to make it more acceptable to traders. And we've also had that clearing efficiency, if you will, that means that the balance sheet optimization is there and on offer to clients as well. So what have we done so far in the derivative space? September last year, we launched 5 indices and 5 country indices and 1 regional index. April this year, we expanded that with 4 more. So we now have 10 futures and options contracts. And what we're going to do next is we're going to bring in weekly index options. We currently have monthlies and quarterlies, and we're going to bring in weekly index options later on this year. And then 2023 and beyond, again, when we started, we had the request for equity futures and options, but also single stock futures and options. And that's where we're looking to go to next. Again, I spoke about our market data earlier, and that provides a sound basis for this, the single stock options possibilities. How's it gone so far? And this is to give you an idea of where we are up to the end of April. growing slowly. These things are never immediate. We have 4 market makers in the options, in the futures space, and another 4 in the options space. They are trading client orders in options at the moment. A lot of the futures orders execution is market maker to market maker at the moment. But we are growing every month. As you can see, March was a very big month. That was in line, and the drop in April was in line with the drop in equities. May, so far, about halfway through May, we are ahead of April already, and we're expecting a larger volume there. We are expecting a new market maker in June as well, and we have been speaking to an awful lot of clients about joining, and they're finding the liquidity now to getting to a point where trading is possible. And this brings me back to what I do is in the index space, and we see indices as the link between derivatives and market data. So the basis of what we do is the very, very high quality market data. So 20 to 25% of the volume every day goes into is derived from our equity market data, goes into the indices that we have. Those indices then power the derivatives. So better market data makes better indices and makes better derivatives products. And that's how we see things at Cboe. We look internally to create solutions to disrupt and to provide a challenge to the incumbents and other index providers and other listed contracts out there. To go through briefly on regarding our indices. The indices have been going since 2016. They've been ticking live since 2016. Again, we were approached by the industry in the UK who were finding it difficult to have to get indices that they were able to use to provide information to clients. It was getting too expensive, too difficult. People were finding it very hard to administer, and they asked us to use our data to provide indices, which we did. A year later, we were again approached by European clients and European trade bodies to say, we'd love to see your products on European countries as well and European regions, and we built those in 2017. We now have about 60 real-time indices, price return, net return, gross return. Historic data goes back to September 2010, and this is available to you free of charge. We try to make our indices as accessible as possible to as many people as possible. Distribution-wise, we have about 30 vendors licensed. We have 45 media partners. We provide our information to them free of charge. So you can, as a vendor, you sign up. You can use our indices as you wish. You can provide live data and constituents to your clients, and the same with media. So there's no step in or barrier to entry, if you will, for a vendor or a media partner who's looking to use our indices. We're trying to build the brand in that way. When we were approached by the industry, we were asked for certain commercial and product attributes that we would be able to use, and they would be able to use that were causing them problems at the time. So all our indices are real-time. We feel that everybody should have the access to real-time data. It shouldn't be something just for banks. We think retail investors and the general public should be able to have that as well. So if you're a client of a Swiss bank who uses our indices on their website, you can see our indices tick in real time rather than in 15 minutes. It is 2022. You can download a film in about 3 minutes. If you have a slow internet connection, you have to wait 15 minutes for an index price to update, and I think that's wrong. And we think that's wrong, and that's why we make everything available in real time. There's no delayed option with our indices. We have a consistent set of rules and methodologies. We are very, very transparent about those rules. Everything is on our website, including our price list, our rules, our methodologies, and our license documents. One of the bugbears of clients was that they would buy they want to buy one index, but they end up owning 3,000 because they have to buy packages. We can sell you one index, we can sell you a package. It's up to you of how you want to approach that. It's the license we sell provides rights to historic and real-time values, corporate actions, constituent weightings, et cetera, et cetera. Everything you would need to run money against an index. And we have straightforward licenses that reflect what the customer needs. Finally, our fees, they are highly competitive and transparent. We offer multi-year discounts, multi-index discounts, and one of the most important requests from the industry was they often saw an index provider coming in with a new product, with a new idea that was very competitive in terms of price, and then once it gained traction, all of a sudden the prices went up in quite a sort of hockey stick manner. We capped our index fee increases at RPI or 3%. Just as a note, we have yet to put up index prices at all, so they're the same as they were when we launched in 2016. So we provide that long-term price commitment, and we encourage usage of the index as much as possible. We don't charge AUM fees, and we don't have any exposure to third-party index fees or data fees, so we can control the price of our indices. And that was the idea, that as a disruptor, we're offering you an alternative. There are other disruptors out there as well, and I encourage you to look closely at everybody and to see what you can use to maximize your A, bargaining power, and B, your ability to use other indices. Our indices are available free of charge for benchmark use. The idea there is to get you used to the index, get you used to using it, and give you an idea of, without spending money, to get your clients used to it as well for client reporting. With that, I believe my time is very close to up. I'll open the floor to questions if I have a few minutes, if that's okay. Sure. Yes. Oh, there's a microphone because this is streamed live across the universe, so you'll need to prepare yourself.
Ask, there was a pie chart where the trading volume is dominated by just one product, and that is EZ50. Could you please?
That's our Eurozone 50 contract.
Oh, I see.
So it's similar to we had a look at that and see where the differences are. Are there differences? Are people looking at certain contracts more than others? It's a similar proportion to the trading in pan-European derivatives at the moment, with the exception of the Netherlands. We seem to have quite a lot of turnover in our Netherlands product, more than you would see. I mean, we are still new. It's 6 months in. Probably a year's data would be better, but that's what we have to show you and to share with you. But yes, the EZ is our Eurozone 50 product.
Yeah, thank you.
Okay. Great. Yep. Unless there's any more, I shall leave you with 5 minutes of your day back. Thank you very much.